Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coxon, Chief Currency Analyst here at HYCM. I hope you're all well. I'm just going to say hello to folks as you're coming in. Please do let me know if you can hear me okay. That would be very good to know. If you could just type it in the question panel. Hi Sammy, good to see you. That's great. Lovely, thank you. I'm obviously coming through okay. Hey Yasser, great to have you. Van, Olaf, Lolu, welcome back. Ali, right, it's good to have you on board. Looking forward to this session. Now, just to make it clear, as we're looking through different trade setups, different currency pairs, different entries or exits, just to be aware that the purpose of this workshop is not trading advice. So this isn't a signal service. However, what it is an education service. So you look over my shoulder, you can see the decisions that I'm making, and as a result of that decision making, you can learn how to make your own decisions as you understand the fundamental and the sentiment factors that are driving the markets. So that's just to make it clear. Right, for this session, we will be conducting our usual market analysis, which revolves around finding a strong and a weak currency pair. That's what we'll be doing. And we'll also be looking at the special topic, which is an important area to look at, and it's how to change your bias as market sentiment changes. I don't know if you've looked at the currencies in the morning and you've developed a strong and a weak currency, and then all of a sudden you find that the sentiment changes, but you can't change your bias. You're still stuck on that outlook that you originally developed. So we'll be looking at how to change your bias and just going through that skill. It's a helpful skill to have, because sometimes you might be having a bias for a long on a currency pair, and then your bias should maybe turn to short. And the currency pair that we'll be looking at today is a perfect currency pair where you get that shift in sentiment that occurs. So that it's a good one for us to look at for today. Handout for the session, workshop guide, is underneath your handout title on the GoToWebinar control panel. There's a small grey triangle. Just click that next to handouts, and then you'll see workshop guide. And when you see the workshop guide, you'll see something like this pop up. And when you look at this, you can see the looking back, looking forward, looking at the charts, looking at the risk, looking at the outcome of your trade. Okay, so that's just the handout. So the idea, print that out, put it by the side of your desk, and it serves as a reminder as to what you should be looking at each day. And we'll be going through this handout as we work through what's happening in the charts today. So don't forget, if you have any trade or topic suggestions, please email me here, giles.coxon@hycm.com. And also, if you have any trade ideas, we'll be looking at those at the end of the session. So if there's a trade you're in or would like to be in, then just let's talk about that at the end of the session. So have that ready in your mind and just pop it in the question panel, which is again is on the GoToWebinar control panel. Little grey triangle next to the questions, click it and it comes open. So feel free to use that as we go through the workshop. So let's turn to your handout. The first thing we want to do is to look back, okay? And we want to identify what the recent sentiment is by reading up on the last two sessions of market activity. And we want to identify that key market sentiment. We're trying to summarize that sentiment in a sentence or two. So we're just going to have a look at the Bloomberg terminal, and we're just going to see, looking at sentiment, the key aspect of judging sentiment is looking at the equity markets. The reason FX traders are interested in the equity markets is because equity investors are very sensitive to risk. If an equity investor is feeling risk averse or worried about the market, then you'll see these equities fall. When an equity trader is feeling optimistic about the future and optimistic about risk, you'll see the equity markets rise. And here you can see that equity markets are all in the green. we can have virtually without exception, apart from the Chinese FTSE, we have green. So Hang Seng closed up 1.21%. The Shanghai Composite closed up plus 1.34%. And if you remember yesterday, the Shanghai Composite closed down around 8%. So we're seeing in the Asian markets some support. Now, the main story at the moment that the market is focusing on is the coronavirus fears. So with those coronavirus fears, that's why we've been seeing some large falls in the equity markets. So let's just have a little look. So let's just have a quick look at some of the major equity markets. We'll go to trading view. And we'll see these falls that have been taking place. We'll just go to indices, major world indices. Well, let's take the S&P 500. And we can see in the S&P 500, we've been having these down days, okay? We've been seeing these falls in the S&P 500. We'll just go to a larger time frame chart, and you can see strong selling dynamic. And on the monthly chart, we see a doji or a pin bar, these are record highs. So the market is saying, you know, we are putting in at least a temporary pause. And this is the coronavirus concern. So that's the thing to, and it's been the same through a number of different equity markets. So let's see if the DAX, there's the DAX. Again, you can see on the German index, very similar dynamic, okay? So that's what's been happening. That's where the market's been in that frame of mind. So this morning, we come to a sea of green. So what this tells us is that the market, at least temporarily, is returning to a more risk-on bias. Okay, we're in a more risk-on bias. That's what the equity markets tell us. So going back to our analysis, what that tells us is that the market is in a risk-on mood. We're seeing some strength in the Australian dollar, the New Zealand dollar, and we're seeing some weakness in the Japanese yen and the Swiss franc. So this is a typical risk-off market. When we get yen, Swiss franc strength, so a risk. This is a risk-off market. We're in a risk-on market. Let me just adjust that. So in a risk-on market, we'll do this slowly. So in a risk-on market, we don't get this. We get yen, Swiss franc, and gold weakness. And we also get Australian dollar, New Zealand dollar, and Canadian dollar strength. Okay, so that is a typical risk-on market that we are. Now, what we have to be aware of, how do we recognize when the sentiment changes? Well, the way we recognize when the sentiment changes is twofold. Firstly, we keep an eye on the equity markets. So you can see the S&P 500 futures is up 1.24%. Remember, anytime an equity market is up over 1% or down over 1%, pay attention. So this is telling us that the US future market is very optimistic just prior to the cash open. The cash open is in just under an hour and a half. European equity markets are strongly up, FTSE strongly up, Euro, CAC, DAX, all well up over 1%. So we're firmly in a risk-on tone. So the first way to recognize if that tone is changing is, do the equity markets fall? So if we started seeing these equity markets, say they went from +1 to maybe 0.75% or 0.5%, then you would look at that and say, oh, hang on, we are still in a risk-on market, but we're pulling back from earlier enthusiasm. So that's how you would see the change. this won't change instantly. It doesn't all of a sudden, unless there's a a really large event that takes place. The equity markets won't suddenly change. They won't suddenly drop. So we're keeping an eye on current prices. Now, the Asian equity markets are closed now. Okay, the Nikkei, the futures markets are still open, so that gives you an indication. But these markets, European markets, are open. So this is why we're seeing the movement here. The US markets are not open yet, but we've got the futures market open. So there's number one. Number two, yes, this is Bloomberg, Sammy. This is the Bloomberg terminal. So this, what you can see here, is the Bloomberg terminal, and it's very expensive, so it's not accessible to retail traders. I think it's something like $12,000 a year, and you need to pay 3 years up front. So you've got to pay like $36,000 just to get the Bloomberg terminal. Okay. So that's where that's now the other way we find out if risk sentiment changes is we listen to the Squawk service. So if all of a sudden you got on the Squawk something like new coronavirus outbreak, 100 new cases in the US, or 100 cases in the UK, or Japan announces 1,000 cases, or some in other words, extreme event that would change the market's thinking. At the moment, the market is kind of getting used to the coronavirus. It's not new news. It's still pressuring higher prices. I'm still expecting sellers on pullbacks, but at the moment we're in a kind of a pullback move on the risk, hence the risk on for today. So that's how we'd recognize the change. We'd look for a trigger, and we know what trigger it would be. It would be a trigger around the coronavirus, and we're also looking at the equity markets, and that gives us an indication of what's happening with risk. So with those two areas, we can see whether risk changes. So, and if it did change, what we would see the opposite of what we're seeing now. So instead of saying yen Swiss franc weakness, if risk suddenly turned off, we'd have yen Swiss franc gold strength, and probably US dollar strength. Then we see Australian, New Zealand dollar, and Canadian dollar weakness. So as we're looking back, one of the key events that we had last night was the Reserve Bank of Australia met. So if you look on the Forex Factory website, which is accessible, and that's free for all to use, you can see, look, the Reserve Bank of Australia met last night. Now, we covered this in the week ahead, and we saw that there was some quite big pressures on the RBA. There's the Australian bushfires, there's the coronavirus, there is general concern about the Australian economy. So when the Reserve Bank of Australia met last night, and here's the rate meeting, and there was some strength that came into the Australian dollar. Now, part of the reason with the strength is this. It's one continuous source of uncertainty, despite recent progress, is the trade and technology dispute between the US and China, which has affected international trade flows and investment. Another source of uncertainty is the coronavirus, which is having a significant effect on the Chinese economy at present. It's too early to determine how long-lasting the impact will be. There's also the mention of the bushfires. So the central scenario, they've said, is that growth is going to remain 2.75 to 3% next year, and that'd be so growth is still expected to be on the up. But in the short term, the bushfires and the coronavirus will temporarily weigh on domestic growth. But the RBA is saying it's kind of too early to really see. So putting that all together, the market's taken that as more optimistic than it was expecting, and it's certainly more optimistic than I was expecting. Looking at this event ahead, I wouldn't have been surprised if there had been a rate cut. So the fact that there wasn't a rate cut, that's part of the reason why we're seeing Australia dollar strength today. So going back to what we're doing, we're looking back, aren't we? So we're looking back, and we can see all of a sudden that there's two currency pairs that are standing out. We're in a risk-on market. So with the risk-on market, we see Australian dollar, New Zealand dollar, Canadian dollar strength. So all of a sudden we can see actually that there's two reasons to be optimistic on the Australian dollar. One, the RBA were on hold. Two, the risk on market means the Australian dollar has strength. Now, we also recognize that the Japanese yen will have weakness. So straight away, when we're looking at the sentiment, we're trying to always govern, we're trying to always answer this question: which currency is strong and which currency is weak? So we have now, for the US session, we have our answer, okay? We've got a weak Japanese yen and a strong Australian dollar. And this was the same for the European session this morning when I came to my desk. And it's still the case for the US session that we're just entering now, okay? So the sentiment for the US session is we've got weak Japanese yen, sold off on risk sentiment, and we've got strong Australian dollar, RBA on hold, and less of a dovish outlook from last night. So let's now look at the Australian dollar currency pair. So once we've kind of established, okay, our currency pair, we then go to work out our technicals. So just looking at the 15-minute chart, and we can see here the strength that we'd expect and the weakness. Now let's start looking at some significant areas. We have significant resistance here at the 73.40 level, okay? So we've got a resistance level there. We also have significant support here, down at the 72.80 region, okay? So as I'm looking at this chart, you can see there is some really key support here and a resistance level here. So with the risk on tone, I would expect any fall back down into this area, we should expect to see buyers. Now, this is where recognizing the change in sentiment is important. Say, you know, this webinar finishes in 2 hours time, price falls back down to this region here, okay? What we're looking for is we're looking for a move down in price that has no reason, okay? That's the key thing. So if price falls back down to there, then we'll think, okay, we might go and have a look at the equity markets. Say, okay, well, how are the equity markets doing? If the equity markets are still high, still in the green, still around 1% mark, then we'll say, okay, well, there hasn't been any risk off sentiment coming in through the equity markets. We would then obviously check our news feed. If you don't have an up-to-date news feed, then have a look at a free website like forexlive.com. Okay. Let me just putting that in there. So you'll see there's a free website called forexlive.com, and you can get some up-to-date news information there if you don't have a news squawk, okay? And then if the equity markets are holding up, if there's nothing new on the squawk, then this would be a perfect area to go long, because you can see it's still in a risk on market. So we're still expecting the Australian dollar to be supported and Japanese yen to be weak. And then where would our typical target be? Our target would then be up to those recent highs, okay? So that's scenario one. Let's say scenario two. Say scenario two, the risk on tone continues and we start to see the Australian dollar break out of overhead resistance at the 73.40. In that scenario, once we get a breakout, what we might want to consider is a retracement back to those recent highs. So once that resistance level has broken out, it's textbook stuff, isn't it? Resistance turns support. So then we could look at an entry, a re-entry around the 73.40 level if price broke out. Now, someone might say, well, couldn't I just enter in now? Well, yes, you could enter in now. However, the range for the day is we're around the top range of the day. So this kind of area here is the maximum range that we might expect for the day. So you'll be buying at the top. So that's why I'm not buying this pair from here. I am only interested in buying the pair from down below here. So, you know, the other potential entries would be the 73 handle. Okay, that would be another good level. But the 73 handle, but the 100, the 200 exponential moving average, and a pivot point all around here. So that would be another potential entry. And you're looking at the Fibonacci retracement, you can see that that is probably, yeah, looking, it's bang on around the 50% level here. So this region on top of here would be another potential area to buy this currency pair. So that is the sentiment for the US session. You can see what it is. Now, one of the key ways of recognizing how that sentiment changes, we've looked: 1, equity markets; 2, newsfeed. And so look at the risks to the outlook. What would change this? What would be a risk? Well, it would be a risk would be anything that causes the yen to strengthen. The yen is a risk currency. So if the market is scared or worried about risk, it will buy the yen. So anything that creates yen strength, so it could be maybe another US strike on Iran, perhaps the worsening outbreak of the coronavirus, maybe a souring in the deal between the US and China trade war. There's any number of factors, maybe a disastrous comment from EU or UK regarding the EU-UK trade deal. Anything like that could potentially turn the market back into a risk-off environment. So that is what to look for. That's the currency pair that I'm looking at, and that's the levels that I'm looking at. Now, another currency pair that's worth looking at. Now, this is a lesson here, right? Looking as well at the weak pound and the strong US dollar. There was some good US data out yesterday from America. Just show you that. So on Monday, we had good ISM manufacturing data. Okay, 50.9 versus 48.5 expected. That was good, and that resulted in some dollar strength. So we're seeing some dollar strength. Now, we also had the EU and the UK talking about the potential outline of a trade deal, and the talk was not good because Boris Johnson said he's prepared to walk away from the EU if the trade deal wasn't good enough, and the EU are saying that there's certain things they're not going to compromise on with a trade deal with the UK. So putting that together, that's why we've been seeing some pound weakness, okay? So all of a sudden, we can see there's a weak pound sentiment in the market, and there's a strong US dollar sentiment in the market. But this data was from yesterday. I remember most sentiment, the market craves what's fresh and new. So this was very good, fresh and new yesterday, but now it's getting a bit older, okay? So it's 24 hours old. Now, let's look at the pound US dollar currency pair. Right, and we can see here, right, that look at the daily chart, we can see that prices moved down just slightly outside this descending trend line. We recognize that as a potential explosive zone. So we've had attempted a break, and now the market's like, is it going to break or is it not going to break? This is going to be a key area. So looking at this chart short term, you know, a short-term potential area to go short the pound US dollar would be this area here, okay? Any return up to this kind of area, 1.3050, would be a potential area to short the pound. That's what I'd expect to see sellers in this area. But because the sentiment is a bit, you know, it's a bit old, that's why we didn't want to short right down here, because some of that news is old. But the deeper a retracement you get, I think the big picture still for the pound is one of difficulty, because in the big picture, the pound is going to struggle, is going to do a deal with the EU, got to do a deal with the US. There's difficulties for the pound ahead. So I do favour pound sellers, but this region here is probably just a little bit too near the lows. However, a retracement back up, maybe a retest of that descending trend line with stops above the high would make more sense on a swing trade. So a potential, longer term trade could be a return back up into this region or this region with stops just above the high or possibly stops above this high over here. So as a swing trade, I like the pounds, but remember, we've got, looking forward, we've got US data coming out, haven't we? So we've got US data coming out shortly, which could be a catalyst for the US dollar. Factory orders coming out at 3 o'clock, so about an hour and a half away. And we also have non-farm employment check, ADP jobs numbers, and we have services PMI out for the US on Wednesday. So just be aware that if we get good figures out here for the US, and then we've got a good expected number for non-farm payrolls on Friday, 160,000 expected. That's quite a robust number. Average hourly earnings expect to be plus 0.3% versus 0.1% prior. So that's good data. So if we get good US dollar services PMI, get good non-farm ADP jobs number, then potentially you could look at buying the US dollar into the non-farm payroll event. We're likely to see a dollar strength, so you might look at the dollar index for that. So looking at the charts, you can see, look, this is what we've got, the dollar strength on that good data out yesterday, and repelling the 200, 100 exponential moving average on the daily chart. So any kind of good data might be opportunities to buy the US dollar. So a break above this 98 level. So break above the 98 level and a potential return to there. I'd expect to find buyers if the data is positive, and that's a dollar index. So that can be traded as an index if you have that on your platform. So that's just to be aware of. Other thing to be aware of is, I pointed this out last week. I'll briefly point it out again. If you want more of an explanation, go back to last week's workshop. But just to say that in 2003, after the World Health Organization declared the SARS virus a global health emergency, we saw that was the cue for a rebound in equities, and we saw the S&P 500 March the 12th. We got the announcement, and then the S&P 500 recovered much faster than the Asian equities, and obviously that's because the SARS virus impacted Asia much more heavily than it impacted the US. And that's exactly the same now. We have thousands and thousands of cases in Asia, and there's something like, I don't know, is it between 2 and 10 cases in the US, just going through the top of my memory. So, once the virus fades, obviously the S&P 500 is going to recover much quicker than the Asian markets. So that's just something to be aware of for any of you equity traders. It's helpful to be aware of that. So we've looked at the charts. That's when we've been looking at Australian dollar, Japanese yen. Now look forward, see what key events do we have coming up. You can see coming up, we've got some US goods, and we also have some New Zealand employment data coming up later. You can see the employment data at 9:45, just over here, and that is going to be very important for the New Zealand dollar. And the risk here is if we get a bad reading. The market's generally turned a little bit more constructive on the New Zealand dollar, a little bit more bullish. But if we get some really poor unemployment rates, so they say the unemployment rate rises, 4.4%, 4.5%, and the employment change drops, then any negative data will really impact the New Zealand dollar. We'll see some stronger New Zealand dollar selling. Okay, so just be aware of that. It's important, this employment data. It's coming up tonight, 9:45 GMT. So any New Zealand dollar traders, be aware of that. And then look tomorrow morning to see what was the result of that employment data and what was the market's response. and then you may have your strong or weak currency for the next day. So be aware of potential risk there. So going over to you now, guys, what trades are you looking at? What trades have you got? What trades are on your agenda for the day? Let's have a look at those. I'll just give you a moment to type it in if you've got something you wanna look at. Be good to see what you guys are looking at. Okay, just waiting, see what's going on. Okay. Okay, US dollar, Swiss franc. So US dollar, Swiss franc. Okay, let's have a look at that, Salvatore. Are you short or long US dollar, Swiss franc? Let's have a look. Okay, so US dollar, Swiss franc, what we have with this currency pair is we have a bias to the upside. Now the bias, Salvatore, is to the upside because Swiss franc, so in a risk on market, we see Swiss franc selling, okay? So we've seen some US dollar strength, and we're seeing, because of the good US data yesterday, and we're seeing some Swiss franc selling because of the risk on sentiment. So let's just go through that. Risk on sentiment is here, okay? Equity markets are up, and we're seeing the corresponding moves in the currency markets. Then we have the US dollar is up because of the good US data yesterday. So potential longs for US dollar, Swiss franc would be anywhere around this 0.9670. So if you get a fall back into this level, Salvatore, that's potentially a good place for longs and profit taking up at this 0.9690 level. Okay, so that's potentially what I'd be looking at, and I could see there, and stops running below the lows. Obviously, you've got a deeper retrace, and as long as sentiment hasn't changed, then you could consider longs from 0.9650 region as well. So anywhere along this region, that region, the combination of the two moving averages would be an area I'd be looking at for longs. What would change that, Salvatore? Well, what would change this outlook is if we saw Swiss franc strength. So if there was a return to a risk-off market, then that would invalidate that trade. Okay, Sammy, shorting gold. Now, I remember last week, Sammy, we were looking at gold, and you were pointing out that inverse head and shoulders pattern that worked out very nicely. Do you remember that, Sammy? Because I don't know if you were in that trade, but I was watching it after the webinar finished, and it worked out very nicely. That was about a week ago, wasn't it? So here we are, the 4th of Feb. So it was around, when was it? I think it was around this. There was a reverse head and shoulders pattern that worked out very nicely. Okay, so you're looking to short gold on retracement. Yeah, Sammy, that makes a lot of sense to me. We're seeing some gold weakness because we've got the US dollar strength. We're on a risk-on kind of market. So any retracements up higher, 1572, 1573, this region, that region, I think that would make sense for gold. Yeah. Yeah, you didn't say, yeah, okay. Yeah, I thought you did remember. I can't see it where it's on the chart for the rest of the guys, but I was watching it afterwards, Sammy, and it played out like textbook. So well done you, Sammy, for pointing out that. Good technical setup. The fundamentals and the technicals lined up nicely, and that was a nice example that worked really well. Yeah, retracements on gold, that makes sense. Now, what would invalidate this trade? What would invalidate this trade would be if we saw some gold strength on geopolitical concerns. You notice the little spikes we've been getting at gold. So when you had a spike here on the 3rd of Jan, spike here on the 7th of Jan, that was both on geopolitical concerns. That was the assassination of Qasem Soleimani, the Iranian top general by the US, spiked in gold. That was the Iranian retaliation on the US airbase, or the US army base rather. We saw a strong spike in gold, and we've seen some spikes in gold on coronavirus fears. But, you know, unless we get some major geopolitical concerns, this 1600 handle is kind of capping gold, and with some US dollar strength coming in, then that's going to work against the gold position. So look at the US data coming out at 3 o'clock. That could be a potential catalyst for this as well. Okay. Okay, guys, there's plenty for us to be looking at there for the coming session. So do take an eye. Make sure you look at those currency pairs, look at risk. If you see some moves down, check the reason. Why has the price moved? That's the key thing to recognizing that sentiment change. And if sentiment does change, this is what to do. Let's say, hypothetically, that coronavirus fears really take off again, okay? They really start taking off. And what we might see something like this, okay? If the coronavirus fears take off, we'll see like a big red candle, like right down to here, pretty much straight away, okay? So if we saw that, then we might want to say, well, either if the risk has changed so significantly, we either want to join it at the market and go for lower prices, or look for a retrace, look for sellers like back up to this level, up to the 73 handle, the 73.10, the 73 handle. That would be a good place for potential shorts. So learn to sway with the bias. Don't think to yourself, you know, hang on, I've done my risk analysis. You know, I've analyzed the market and I've come up with this. I've come up with strong Australian, weak Japanese yen, and don't marry the position. You know that expression, don't get married to your position. Getting married, you get married for better or for worse. But we don't marry our trades, because as soon as our trades start getting for worse, unlike marriage, we just leave the trade, okay? So you don't marry your trades, get ready to change with the bias. Again, if you're struggling with your trade, oh, okay, Ifam, good question. In looking at sentiment change, what chart time frame is best to use? Now, this is not about looking at the time frame of chart, Ifam, because when the sentiment has changed, you will see it first of all in the equity markets, and you would see a reaction. There'll either be some news headline, something that comes through, okay? That's what you're looking at. You're looking at something that comes through, okay? So, I don't know how to put this. It's not a question of a time frame. It's not like you can say, well, you know, I'll look at the 15-minute time frame. The general day trading time frame to use is something like 15 minutes or a 30-minute chart. And say for example, if you suddenly see a large red candle down to here, the first thing to do is to check. Go to a website, go to like forexlive.com and have a look. Is there a reason? Has there been a headline? Has there been something that really changes that, okay? And if there is a move that changes that, and if that is a sentiment change, you would know about it, because it would be something like a big coronavirus headline or something like that. So you're not looking so much at the time frame of the chart, you're looking at more equity markets, you're looking at the overall picture, okay? But having said that, if you do see, you know, 15-minute chart is good to use for intraday trading, Ifam, so that's a good one to use. And if you see a large candle, look at the reason. You see here, look, we've got that large candle here. That was after the RBA was on hold, okay? So when you see like a large candle, look at the reason for it, you know? And as you look at the reason for it, it should become clearer to you, okay? And sometimes you might want to consider like a squawk service, or a service that helps you with that. So there are a number of services around, and if you'd like details of a service, just email me at giles.coughlin@hycm.com, and I can put you in touch with a service that might help with that. Okay, but that, you know, if you don't have access to that service, that's the way to do it. Finally, as we close today, I hope that helped, Ifam. I hope that helps. Let me know if you've still got any other questions. Okay. Okay, looking at risk, if you're struggling in your trading at the moment, make sure you're really keeping a tight control on your risk. You know, I recommend, especially when you're learning to trade, don't trade with a lot size that's greater than your account size. So in other words, to trade without leverage means that your trade size matches your account size. So if you have account size of $1,000, then maximum risk would be 0.01, okay? $10,000 maximum risk would be 0.10 lot. Okay, so in this instance, the trade size of 1/10 of a standard $100,000 US lot equals $10,000, the same size as your account. Now, the maximum I would use is leverage to the power of 1 to 2 or maybe 1 to 3. So if there was a surprise interest rate change, then I would consider using leverage of 1 to the 2, 1 to the 3. Otherwise, I wouldn't. Oh, good, Ifam. I'm glad that helps. That's super. So if you're struggling with your trading, you're probably using too much leverage. And certainly if you're struggling with your trading, what you don't want to be doing is you don't want to be using too much leverage, because it will affect your trading psychology. So particularly when you're starting, get your leverage down, get it under control. Okay, guys, it's been really good. We've got plenty of things to look at, so have a look at the markets this afternoon and see how it all plays out. Set yourself a challenge, see if you can recognize if and when the sentiment changes, and use it as a training lesson, because recognizing and understanding when that sentiment does change is a really important skill and will serve you very well as you go forward in your training. I wish you all the success, and I look forward to seeing you next Monday for the webinar. Take care now, guys, and have a great week. Look after yourselves. Thanks, Yasser, Sammy, Van. Great to have you back as always. Salvatore, Loli, Hashik, Ifam, Ali, Aaron. Good to have you too. That's great. Take care now, guys. Goodbye.